22 minutes past the hour, and this is CNBC's Worldwide Exchange, broadcast live from Asia, Europe, and the United States.
Our equities market still the way ahead. Well, our next guest is reducing his weightings in large caps and moving them into small caps. For details, let's talk to Peter Howe, head of trading, Helvetia Wealth. Peter, good to have you with us. Now, in particular, you like the small caps in Japan. Why?
Well, we see Japan as a very big underperformer this year. Obviously, investors that have been in Japan this year have been pretty disappointed. Fundamentally, we see Japan as being very strong. We're looking at mid and small caps because they've been hurt the most over the last sort of 6 months. We've just had obviously Q3 earnings out. They've been very strong worldwide. Also in Japan, we're seeing roughly a 20% better profit than last year in Japan across the board. And we're thinking, obviously, we've had some big moves across worldwide equity markets, and we're just looking for areas that have underperformed but still show good value. That's why we're focusing a lot on mid and small cap Japan.
All right, well, let's look at other smaller companies, Peter. A company called Comax. It's got a lot of niche markets, solar panels, so I guess it's got some kind of green energy side to it. Why do you like this company?
Well, we like this company a lot. It's one of our picks. We've been putting investors in for the last sort of 3 or 4 weeks. They had their Investors' Day last Thursday, where the CEO, Leo Steiner, said that 2006 earnings are going to be substantially better. Their solar, you mentioned the green part, their solar, their solar division is estimated to be growing at 40% per year for the next 4 years. We think it's relatively good value. We think it's in a very good growth area, good management, strong earnings that have come out last month, and we think it's a very good company going forward. It's obviously had a move in the last few weeks, but we saw Bank Saracen raise the price target to 170, and we think that we should be certainly trading around those levels.
And Peter, Michelle here in the United States, where you like Sabre Holdings. That's the owner of Travelocity, right?
Exactly, yeah. It's again, it's not that much of a small cap, but we like the Travelocity site. I think it's in the top 5 in sort of consumer travel sites. They're obviously #1 in the industry, where everyone needs to do their online bookings, so all the travel agents have them. They've recently started their, it's called Sabre Cruise, for all online cruise bookings. We think it's 14 times earnings for this sort of growth story in the markets it's in. We think it's a little undervalued, and again, a lot of these companies have moved over the last 3 or 4 weeks, but we believe that there's some strong movements going ahead into 2007.
Peter, before we let you go, can we get for disclosure purposes for our viewers, do you have any personal or company relationship with these 2 companies that you mentioned?
We don't have a relationship with Comax or Sabre. Our clients are holding Sabre Holdings and Comax, but we don't hold the stock personally.
Okay, Peter, thank you very much for being with us. Peter Howe, head of trading, Helvetia Wealth. Well, another news making headlines here in Asia. China Merchants Energy Shipping, the country's biggest oil carrier, is set to raise around $1.4 billion in a Shanghai